A lot of people ask for a TROW stock analysis, so here we are. The stock is going up and down a lot lately, which means it's the perfect time to do an analysis. Earnings looked pretty good with a beat on EPS and revenue. They also announced a dividend increase not too long ago. And that's also one of the main reasons why people like TROW stock. And I understand why, with dividend yield at 4.5%, a high growth rate and 37 years of consecutive dividend increases. However, if we look at the total returns in the past 5 years, we see that TROW stock massively underperforms the S&P 500 ever since 2022. So could this be the perfect time to buy TROW stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. And more importantly, which price target is the most justified in my opinion. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does TROW do? TROW Price provides asset management services for individual and institutional investors. It offers a broad range of no-load US and international stock, hybrid, bond and money market funds. If we dive in the most recent earnings, we see that TROW had a year-end assets under management of 1.4 trillion. And this is a really important number for TROW. If the market does well, TROW does well. And EPS was reported at $1.9, which is looking decent. In here we see a bit more detailed numbers. The most important thing is that assets under management is growing again, which is the good part here. It's the same with the revenue and the EPS. And the growth of assets under management was much needed. They took a big hit in 2022, but they are recovering quite decently. Another interesting thing is that operating margin took a big hit in 2022, hitting 16.6% in the fourth quarter of 2022. Throughout 2023 the margin increased again. However, in the fourth quarter of 2023 the margin decreased again. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. TROW stock is a 24 billion market cap company. PE ratio is at 13.5, indicating they could be undervalued right now. Later in this video I will show you my 3 price targets for TROW stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on the current valuation on TROW Price. And I'm also interested to hear your thoughts in general on this company. Revenue is at 6.4 billion and in this graph we see that revenue went up really steady and consistent. Of course there is the impact of the market crash in 2022. Margins are going up in the long run, which is something that I really like. Again, we see the impact during the stock market crash in 2022. They are starting to recover pretty decently. EPS is looking really good. It is similar to the revenue and the margins, which is very nice. Analysts have mixed feelings about the upcoming years for the EPS. They expect that TROW will hit $8.4 in 2028, which is a decent growth from here. For the revenue, analysts also have mixed feelings, and we don't see any growth here. Return on assets is sitting at 15%, which is a great number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 10.6%, which is a really great number. It is lower versus the 5-year average, which is not a good thing. Current ratio is at 2.84, which is a decent number. Nothing really special to mention here, to be honest. Right now TROW has 400 million in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. TROW has 2 billion in total cash, so they can pay down all their debt, and this is something that I really like. However, it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up and down in the long run. It is not really steady and consistent, but in general it is going up, which is the good part here. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 4.5%, which is a great number. Annual payout is at $4.96 and payout ratio is around 64%. I prefer 50% or lower, so right now they have 36% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at almost 12%, which is a great number. On top of that, they increased the dividends for 37 years in a row, which is really impressive. In here we see the dividends paid since 2012. You see that TROW did increase the dividends at a high pace. The decrease you see in 2022 isn't really a decrease since the 2021 dividend includes a supplemental dividend. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that payout ratio is increasing, which is something that I don't like of course. However, I expect this number to decrease again in the coming years when things cools down in the stock market. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous years. And overall these dividends look really good to me, but how about the historical returns? I decided to compare TROW stock with the overall market, in this case the S&P 500. On the 5-year chart we see that TROW massively underperforms the S&P 500. In total, TROW returned almost 32% including dividends, while the S&P 500 was sitting at 94%. On the 1-year chart it's pretty much the same story, with TROW sitting at minus 4%, while the S&P 500 sits at 24%. On the 6-month chart, it is TROW that is having a 3% return, and again this is including dividends. The S&P 500 is sitting at almost 15%. On the 1-month chart it is again TROW that is having a negative return, while the S&P 500 is sitting at a 2% return. Bottom line, in the past 5 years the S&P 500 was the better choice here. But could this be the perfect time to buy TROW stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 27, 29 and 31%. For the free cash flow margin I'm putting in slightly lower numbers. For the PE ratio I'm putting in 13, 14 and 15. For the price to free cash flow I'm putting in the same numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now TROW stock is around $109. I hit analyze and we see a lot of red numbers. We have a low price target of $79 to $82. We have a mid price target of $101 to $105 and we have a high price target of $130 to $134. To me, the mid to high price target is the most justified here, meaning the stock could be undervalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on TROW is that the market had a big impact on the company's performance. For the upcoming years, I expect the company to recover to historical margins and revenue growth numbers. However, there is work to do for this company, and they seem to do a decent job now. They keep on increasing the dividends, which is very nice, but some fundamentals really need to change. From a value point of view, I think there is some potential, but not too much. For now, I'm waiting for the stock to drop a little bit. And then I will buy some more shares. TROW is already in my portfolio, and the main reason being the dividend. I keep analyzing them from time to time, and when the moment is there, I will add more shares. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.